in most minds, the fortunes of Zee as a company, maybe, and as a stock for sure, are hinge on this deal going through and the deal going through soon. Now, does yesterday's news bit come as a rude shock?
Hi, Neeraj. Morning. Thank you for having me on the show. So basically, for the second part which you mentioned about the CCI approval, which is there, I think this was a part of the process because unless you don't get a go ahead from CCI, NCLT will also not approve, the overall transaction and the deal. So this was the need of the hour. Exchange approval also came in after a very long delay. If you look at something like a PVR, Inox, for them, the exchange approval came within 3 months, right? So broadly, there has been a delay in terms of the overall merger process for Zee, which is kind of having a negative impact in terms of the share price performance. And I think it did come as somewhat as a shock, for this, in terms of the CCI, which is there. So I think the CCI is more of an inquiry. It is not that the merger will be called off or something of that sort. I think there could be a change in terms of the way they're doing the transaction, or there could just be some issues which could be addressed by by the management towards CCI, which would make them more confident in terms of the deal going through. Because the broadcasting industry itself is going through a lot of challenges right now. I mean, in terms of market share numbers, both these companies, in terms of ad market share, will be beyond 50%. But if they have to give up certain genres or certain channels, I think there will be a way where they can work upon, and the deal will go through. So I believe, as of now, as we speak, there's a higher probability of some kind of reject, and the queries being addressed by the management efficiently for the deal going through. So that is something which is going to happen. But nonetheless, I think the stock price movement will be under pressure. So, we all are expecting a very sharp re-rating in terms of valuation multiple, primarily because of the synergies that are going to come in because of the merger, both on broadcasting and the digital business. So I think in terms of valuations, the stock is already at fair valuations. I think risk reward is very favorable. You could see a downside of anywhere close to 5 to 10% in a worst case scenario, but the potential upside is beyond 40-50%. And the potential upside is primarily because of the merger going through. So if that process is delayed, that upside process will also be delayed basis that.
We'll now see Zee broadcasting the Cricket World Cup per se. Did this happen because Star had bitten more than it could chew by virtue of the biddings that it has done? And part two, is this a positive for Zee, or is it dependent on what kind of numbers have they paid for getting these rights? Because I couldn't find the numbers. Maybe I've not looked at the right places, but I couldn't find the numbers.
Right. So your first question, in terms of why Star would do such a thing. So I think it's something which has worked out very well for Star, because I think they are having a balanced approach. They're not putting all eggs into one basket. So, they have got the TV rights of IPL, which is the most compelling cricket sports property that we have today. Because they could not, or they didn't want to rather, spend on digital in terms of such a high content acquisition cost, because the economics may not be favorable. Whereas for a Geo, it is more favorable because they have got the last mile customer, which is there, which nobody has in the ecosystem today, right? So distribution is a really big, positive if you have that by your side. So I think maybe that's the reason they didn't want to go through that. So here, I think it's like a balanced approach. So if you look at Disney Hotstar, for that matter, I think broadly a larger portion of their revenues today do come from cricket, right? Close to 70 to 80% of their revenue or the subscriber base do come from cricket. And within cricket, IPL would have a 80% share within that cricket share which you're talking about. And so if they did not acquire the other properties, you would have seen a sharp decline in terms of the number of subscribers. But because of these marquee properties being there, and because these properties come up every year, so every year there is either a T20 World Cup or a Champions Trophy or a 50-over World Cup. So because of this, I think the quantum of decline in terms of the subscriber base will be much more limited as compared to what we were expecting earlier. No doubt, the decline has to happen. The subscribers have to move, from a Star, to a Wood or a Geo, wherever IPL is showcased. But there will be certain limitations in terms of the subscriber drop which is there. And plus on TV, they do have IPL, which is already there, and they're already leaders over there in sports. So my point is, I think it's a very good balanced approach that Star is following right now for TV and for digital. They have got properties set and they have got the strategy set in terms of how much they want to spend on each medium, and how do they see the economics of this business across both the mediums which are there today. Secondly, as far as Zee is concerned, of course, I believe it's more of a negative than a positive. Firstly, I think the acquisition cost is not known to us. But broadly, what happened in this case is that, IPL, we saw a lot of unbundling happening. I mean, the packages were bundled into four bouquets, right? One was a TV, one was digital, one was the cluster, and one was the overseas. In the case of this IPL content, you did not see any kind of unbundling. I mean, the property would have been just sold in one package altogether, and maybe that's the reason Zee was not able to just buy the core TV rights put together, which is why Star bought both, and then sublet or kind of licensed the exclusive rights to Zee. So the thing is, over here, what is happening typically is that in terms of acquisition cost, if you look at IPL, broadly, 48 to 50% of your cost of content on IPL was led by TV rights, right? So if we make the assumption here that out of the $3 billion, roughly around 50-55% is going to be led by TV, which is what my assessment is, and the numbers will largely be in that range. The basis that I think they paid close to $1.5 billion for this content acquisition, right? So that is the cost that they paid. Now, let's look at the monetization impact, and let's look at, in terms of how they can move ahead with this property. So first and foremost, I think this property will do a very good, will have a very big advantage for Zee, specifically because it will lead to a big jump in terms of eyeballs and viewership share. Because if you look at Zee as a company, I think they've been struggling in the last 12 months. They've tried to reject their content strategy, but they've been consistently losing viewership share across many genres. So I think that is a problem area which they needed to address, and they had to do some innovation in terms of content strategy. So maybe rather than investing into GC or other shows, they've tried to invest into cricket, which I feel is a good strategy in terms of driving eyeballs. But I think the economics of this business are not very favorable, right? Because typically what happens so IPL as a property is very different in sports. You have got other BCCI or international property which are very different in terms of sports as an offering. So IPL typically is the most compelling cricket property today because all the matches have a very high share in terms of eyeballs, and that is typically because you've got Indian players and foreign players playing together, right? So that's one big reason over there. In the case of these marquee tournaments, you do have a very big eyeball base in the India-based matches. But when the non-India-based matches comes in, the eyeball share drops by at least 30 to 40% or even more in many of the cases. So the point is that you are betting on a property wherein you have got only 25-30% of the matches which are India-based, which have a higher target audience, which are very good in terms of the monetization or the ad pricing opportunity. Apart from that, the monetization opportunity drops subtly over there.